a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Nvidia and semiconductor ETFs. And we know that ChatGPT's sudden popularity has accelerated the AI race, and chip makers, semiconductor companies are the most obvious winners of this AI gold rush because these are the picks and shovels. So Nvidia this morning touched a market capitalization of $1 trillion. It joined this exclusive club with Apple, Microsoft, Amazon, and Alphabet. Only these companies have more than $1 trillion market capitalization. And the stock is up over 180% year to date. A lot of these gains came over the past week since the company reported its results, excellent results, and it beat on the top, on the bottom lines. But what impressed analysts the most was the guidance. The revenue guidance for the current quarter was more than 50% ahead of current street estimates. And that is mainly because of exploding demand for its cutting edge chips which are used in AI applications. So NVIDIA's powerful GPUs are excellent for doing those complex processing which is needed in generative AI, and particularly its H100 chip, which was released just a few months back. And NVIDIA's CEO, Jensen Huang, called it that this is the world's first computer chip designed for generative AI. In fact, it is one of the most powerful processor that the company has ever built. And it is best suited for training the vast sets of data which are required for large language models. And then over the weekend, the company released more AI products and services. They particularly announced a new AI supercomputer platform called DGX GH200, which is going to help tech giants in building generative AI models similar to OpenAI's ChatGPT. And Microsoft, Google, Meta are expected to be the first clients that will get to access this supercomputer. And don't forget, NVIDIA also has a software platform called CUDA. So obviously, NVIDIA is much ahead in this game. They have most of the market share and they're best positioned to win in this AI arms race. But let's talk about other chip companies also, which will be benefiting from this race because there would be surging demand for computing power. So AMD is a distant second, but the stock is up over 98% year to date. It has a much smaller share in GPU market, and it would be launching more GPUs later this year. But a very innovative company and worth a watch. Shares have done quite well. Then companies like NVIDIA and AMD, they do not manufacture their chips, they just design their chips. So chip manufacturers are also very important in this race. TSMC, Taiwan Semi, which has more than 55% of the global foundry market, is up about 40% year to date. Warren Buffett had bought a stake in this company, but he recently sold that stake. And he said that it is one of the best managed companies in the world and also one of the most important companies of the world. But there are geopolitical risks because of rising tensions between China and Taiwan. And then there is ASML, the Dutch company, which makes extreme ultraviolet lithography machines. So it supplies those machines to a lot of those species to TSMC and Samsung as well. So all these are very important companies, and these are among the top holdings in the chip ETFs. Now let's take a look at 4 chip ETFs. So the first one I'm highlighting is by iShares. It is now the largest semiconductor ETF. Has seen a lot of interest from investors lately. The ticker symbol is SOXX. It holds 30 US listed semiconductor companies and follows a modified market cap weighting methodology. So the top holdings are capped at 8% and others are capped at 4% at the time of rebalancing. Has 9.4 billion in assets and charges an expense ratio of 35 basis points. Now there is a smaller and cheaper rival by Invesco. The ticker symbol is SOXQ, which is also worth a look. But as I said, much smaller, 121 million in assets and has an expense ratio of 19 basis points. But the index is quite similar. Now let's take a look at this ETF by going to the code page on Zacks.com. You can read our research report, articles, and using the link, you can go to the iShares webpage for this ETF and see what it holds. So in all these ETFs, you will see Nvidia as the top holding because of its surge. So at the time of rebalancing, this would be brought to 8%, but as of now, it is more than 11% of the portfolio. Avago or Broadcom has also done quite well lately. So that is 9%, and AMD is about 8%, and then other companies. Marvel Technology also benefiting from the AI boom. And the second ETF which I'm highlighting is by VanEck. It used to be the most popular ETF earlier. SMH has 9.1 billion in assets, 35 basis points expense ratio. So this holds 25 chip companies. SOXX has 30 chip companies and market cap weighting scheme. Let's take a look at its holdings, and again, you can use the link to conveniently go to the VanEck web page for holdings, etc. And you will see what are the top holdings here. So again, Nvidia is the top holding, and it now has about 17% of the portfolio. Then TSM about 12%, and AMD and Broadcom. The fourth ETF which I'm highlighting is different. It follows an equal weighting methodology, has 38 holdings, same expense ratio of 35 basis points, and quite popular, but not as much as SOXX and SMH. It has 1.5 billion in assets. And again, let's go to the code page on Zacks.com and the web page to see what it holds. And you will see again Nvidia, Marvel Technology, Rambus, AMD. These are the top holdings, but they all will be brought to equal weight at the time of rebalancing. So you get a more diversified exposure in this ETF, particularly if you expect smaller and medium-sized companies to do better going forward, and you don't like the top heaviness of market cap weighting methodology, that this is worth a look. Now, on the last slide, I have the comparative performance versus the S&P 500 index, and the VanEck ETF is up about 47% year to date. The iShares product and the iShares and Invesco product have delivered similar performance, 42% year to date. The equal weighted ETF is up about 27%, and the S&P 500 index is up about 10% over this period. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything, and I will see you next week.